Hey, welcome to Two Doctors Homestead. My name's Daniel, and today we're going to talk about gold and silver for investing and for the apocalypse. Investing for the apocalypse or investing in general. Now, this is not financial advice. This is for entertainment value. We're going to be talking about the apocalypse for part of this. I'm not a financial advisor, right? I did get my MBA before I got my PhD, so I'm at least somewhat qualified in that sense to have the conversation, but once again, not financial advice, right? So I wanted to get that out of the way first and jump in a little bit on my stacks of gold here, my gold coins, talk about why gold, right? I see the conversation come up a lot in SHTF type scenarios. Well, I need gold and silver. Are we going to barter? Are we going to trade gold for candy bars? You know, after the apocalypse happens, how's that going to work? What's that going to look like? And first, let's jump into what is gold and talk about it as an investment vehicle, right? A store of value, right? Gold is storing your value. It's important to understand where the value comes from and how the value goes up over time, right? We've said gold is a store of value. It's one of the oldest stores of value. Gold was used as a currency going back ancient Romans, Greeks, potentially before that. So it's a well-established store of value, and it comes down to the scarcity of the metals as much as the utility, right? We see it used in electronics. It's more jewelry, decorative, that kind of thing. As a metal, it's a great metal, right? The same thing with silver. Once again, it is used in certain industrial type applications. However, in general, the value is the scarcity of the metal and the use in things like jewelry, right? You'll see silver in other uses, but the value goes up based on appreciation more than it does, say, in a stock. If we're looking at a company like Microsoft, I don't work for Microsoft. The value of the company is based on their sales, their profitability, the products they can manufacture, bring to market, and the money they make selling those products. Versus, as we said, this is more of an appreciation. So in terms of where the value comes from, gold is gold, and it's based on the value of the metal. The current spot price for gold right now is $1,991 per ounce. So this would be 1 ounce, $19.91. Silver is $25.43 per ounce, and those are both down a little bit, right? So let's kind of talk about some of the gains. Let's talk about as an investment right now, or going back, right, before we go into SHTF value and why you might want to buy or store gold or silver long term, right? And is it even a good long term investment? And the data maybe says no, but let's get into that. I'm not trying to sell you gold or silver, so I may have a different perspective than people that are trying to sell you gold and silver, right? This is my opinion. This is based on what I have seen, looking at charts and data and whatnot, that kind of thing. So let's talk about gold. Between 1971 and 2022, if you look at a wide spectrum, the gold return was about 7.78%. So that would be an average return per year over time. In that time period, just regular commodities were about 8.3%. Right. If you look at just in 2022, your average return was 0.4%. So we saw a dip. So the numbers I'm giving you and just a summary of what I'm going to tell you is that gold sometimes looks good short term compared to things like the stock market or commodities. But overall, over any period of time, it has not done as well, right? So if we say 1980 to 2023, it's a wide range. It's 43 years. The annualized return of gold is 3.1%. So if you got your coins in 1980, kept them till 2023, 43 years. Adjusting for inflation, your annualized return is negative 0.1%. If you compare that to the S&P 500, which is an accumulation of the value of the top 500 companies, your annualized return 1980 to 2023 would be 11.4%, adjusted for inflation 8%. If you just went with government bonds, your 10-year Treasury note, annualized return 5.6%, adjusted for inflation, you delivered about 2.4%. So you're saying 8% on the S&P 500, 2.4% on bonds, negative 0.1% on gold. And that's using that 1980 to 2023 numbers, if you look at 1990 to 2020, your price of gold increased about 360%. So from 1990 to 2020, increased 360%. At the same time, the Dow Jones increased 991%. Right, so if you do a 15-year chart, price of gold increased 330%, which is the same as a 30-year considered above. Same time period, Dow Jones increased by 153%. So once again, if you, depending on how you look at the time charts, you can say, hey, gold is outperforming stocks, and there are years where it did that depending on what was happening in the market, what's happening in society, right? If you just look at 2021 to 2022, gold outperformed. If you look at 2022, gold has not done so well. Going into 2023, it's actually come down a little bit. So over a time period, generally just investing in stocks outperforms gold 3-to-1. If you look at specific points in history, gold, you could say, outperforms stocks. And there are times when you're looking at the charts where gold may have outperformed stocks. So why is that, right? People get the idea as gold is a store of value. If you think, and this ties someone into SHTF, should hit the fan scenarios, if you think that the economy is going to collapse, the dollar is going to collapse, we're going to go Venezuela where the dollar is not worth anything, you're going to push money to gold, and other people are pushing money to gold. That drives up the value of the gold. It takes money out of the stock market. Those times, those years that happens, the value of gold goes up. Right. Same thing with silver. I've got my silver here. I don't want to forget about the silver. Silver generally tracks gold. I've looked at some of the charts pretty closely. It doesn't do as well as gold, but it's it's a generally a similar asset class, similar asset. Right. Got my silver right here. So when you're talking about gains, long-term investment, it's going to be more stable. Right, I don't think anyone foresees a time in history, in the future, recent future, or the rest of our lives, that gold's going to be worth $0. Right, so you can say in that sense, it is a store of value. It's a stable asset. It doesn't gain as much as the stock market. It doesn't always go up either. Right, if you look at just recent data, it's gone down a little bit. It's going to go up. It's going to go down. It will have returns. Right, you buy gold, you expect in 10 years it's going to be worth more. It may not be the best investment class in terms of returns historically, but it is an investment, right? You can invest in gold. Now, in terms of ways to buy gold, you have coins. There are stocks tied to golds and gold mines, and the gold mines generally track with the value of gold. There's actually cryptocurrencies now that actually track gold and are backed by gold. You're seeing talk of gold-backed currencies, right? Currencies that are going to be based on gold. Our currency used to be gold-backed. You would expect a more stable dollar, right? If it's backed by gold versus, maybe nothing, right? Hard to say. Paper's not worth a whole lot. But gold, if you're backed by gold, you might suspect that as a currency, the value would be more stable, right? So there's an additional cost of buying gold that I have personally seen. If you go to the web or if you're going to someone to buy gold, I don't usually see it at the exact spot price. Usually it's marked up a couple percent. And if you're saying your average returns are 3% per year, not accounting for spikes and panics and whatnot, if you pay 3 or 4% more for the coin than the face value or the spot price of gold, that means it's going to take you a year or two before the value has gone up. Assuming it goes up, it doesn't always do, before you make that money back. So when they're selling you the gold, they're taking away by charging you even a 3% over spot. They're taking your gains for the next year away from you because you're paying that as a fee. The other disadvantage of gold is the cost to secure it. If you've got your coins here, you have to secure those coins. We actually had some silver coins and they got stolen, so that's gone. The insurance didn't really do anything for us. You may be able to insure your gold or silver. We had not. So you do have to, hey, you're going to buy a safe. Are you going to be able to protect it in your house? You don't know. Someone could break in and steal your stash of gold or silver. They're not marked, right? They disappear very easily. So there's the cost of securing it. There's the cost of buying it. So you have those additional costs. Once again, you could go to a stock. You could buy stock that tracks to gold. does not historically perform as well, right? And, as they always say, past prices don't predict future performance, meaning, hey, we're saying S&P 500, Dow Jones Industrial, top 30 stocks, they have historically outperformed gold over time. No guarantee. If we're talking back to SHTF, should you have gold in your preps as a prepper? It depends. It depends on what you're prepping for. Once again, if you're concerned about an economic collapse, that the dollar's going to collapse and lose its value. Once again, look at what happened in Venezuela, and it's happened to other countries where the dollar loses its value. Gold will still have value because it's internationally traded and recognized, right? So the US dollar in that hypothetical situation could go down to zero and gold would not. So if you're worried about that kind of a collapse that could spill over the stock market, or a stock market collapse, once again, people will run to gold and the value of gold will go up at that point, right? So from an SHTF scenario, if it's a nuclear war, nuclear apocalypse that hits and everything's blown up and we're all, hiding from the zombies at night, fighting over scraps of food, well, maybe gold doesn't have a lot of value because the food, brass and copper, stuff like that's going to have more value. So in terms of a prepper's perspective, it has its place. In terms of an investment, it certainly has its place. It holds its value. There's no guarantees, right? It's not a magical investment in that sense, but it does have its value. And we're going to go ahead and check out this gold coin here, right? The other value of gold, as we said, if it's really a main collapse, you're going to wish you could eat the gold, right? It depends on the scenario. The chocolate gold coins are my favorite. You can really enjoy that. I don't know, the value doesn't track the same as gold necessarily. So I hope that helps out, get you thinking, and thank you for watching, and we appreciate you.